welcome. You're watching the India Development Debate. I'm Tamanna Inamdar, and I wish I could start with better news on this Friday evening. But the fact is that India has clocked a 4.5% growth rate in GDP for the second quarter. It's the lowest figure in 6 years. It was widely expected that India would grow slower than the 5% we clocked in quarter one. Some estimates pegged it even lower than the 4.5%. Weak manufacturing and slowing exports are some of the key contributors. Now, there was ample warning, so no major surprise here. But to add to the woes of the Finance Minister Nirmala Sitharaman, the room for expenditure is also constrained, with fiscal deficit between April to October at 102.4% of the full year target. The key question, though, is how low can this figure go? In the meantime, the chief economic advisor has come out and said he expects Q3 to be better. Is that optimism grounded in reality, considering the figures we're seeing? To get a sense of the GDP woes, I'm speaking today with Ananth Narayanan, Professor SPGIMR, R. Gopalan, former Secretary DEA, and R. Bhanumurthy, Professor NIPFP, and Pooja Mehra, author and journalist. Welcome to all of you, and thank you for speaking with me today. Ananth, let me begin by just getting your take on the numbers and how you break it down. Is it the same story that we saw in quarter one in terms of key contributors?
Yes, Tamanna, sadly the story continues. As you said, we had ample warning that this would be a soft number. At one level, we were even expecting worse. There were some whispers of 4%, so 4.5% is a bit of a relief. But the internals are pretty disappointing. Private consumption has grown by about 5%, but investment has barely grown by about 1%. Industry is growing at a negative pace. So overall, both consumption as well as investment seems to be in a complete slump. What is holding this up has been government spending. In this particular quarter, government spending has gone up by more than 15% year on year. And frankly, that's not a very sustainable way of pushing up growth, given that, as you rightly mentioned, we have constraints on the fiscal side. Overall, look, it's just reiterating what we already know. We are in a consumption and investment slump. The issues that dog the economy are deep and structural. There will be pressure on some monetary and fiscal response, but frankly, only focusing on that, I think, would be a mistake. We need a lot more of actual surgery to go through.
Well, is it something that can improve from quarter three? Let me just come to the key question, and I'm coming to you first, Mr. R. Gopalan, on that. The chief economic advisor says that he hopes that growth will pick up from quarter three. Can we hope to see the impact of some of the steps this government has taken kick in by then, with lag effect?
I'm not so optimistic on that front. Let me tell you, you look into the core sector growth in the month of October. It has become more negative. It has contracted even more than what it was in the month of September. So we are not starting with a very, very good number as far as the core sector growth is concerned. But you look at the way people are talking of. Let us go into the auto sector. People are saying that in November the growth is going to be much less than what it was in October. And December, the year-end season, maybe people may try and pick up as per the past performance. But you go through the other two-wheelers, you go through diesel consumption, electricity consumption, agricultural wages, rural agricultural wages. Now, all of them are not pointing out that in the immediate future there is going to be much of an improvement. I would rather say that with some of the improvements which CEA points out, maybe we could go up a little bit, but as Anand says, there is a limitation on how much government can do. Its budget is already strained, and we are staring at something about 4% fiscal deficit. If you look at the shortfall in the direct taxes collection and also the GST collection, if you look at, it's not showing up at all. And in the last quarter, I have my own, I'm not able to understand from the way the indicators, lead economic indicators were there, and what we are looking at the consumption at 5% growth rate, it doesn't sound okay with me. I'm not able to understand clearly how that can come about with the numbers that are being brought about. Anyway, one thing
Can you
which stands out
elaborate
at
on
this
that point,
point in
Mr.
time is
Gopalan?
the
Can
consumer
you
credit
elaborate
is
on that point?
growing.
Can you elaborate on the point you were just making? What exactly is not sitting well with the kind of indicators you've seen?
Yeah, with the indicators of the consumption indicators of domestic vehicle sales. I mean the two wheelers, the tractors, the diesel consumption, agricultural wages. If you look at some of these lead indicators which we look at for the purpose of computing what the consumption is likely to be, the numbers they are showing is horribly difficult to kind of look at. And you look at the consumption, private consumption increase from 3.1% to 5%. That's something I need to really look at to check how correct that is. I mean, it is correct obviously, but where did I go wrong in presuming that it has got to be lower than what it was in the previous quarter is something I need to look at. So it's a self introspection. I'm not able to really understand. Maybe others can throw light on that.
Professor Bhanumurthy, you want to come in with opening comments on the numbers we've seen? See, largely the sense I think people want to get, and because today GDP is the top story across all channels. Everyone is talking about the slowdown in the economy, and not just the economists and business community which looks at it. And people are trying to understand if we are at the bottom of the cycle. Do the finer details give you an indication that we're at the bottom of the cycle, or are we seeing more pain in store?
Yeah, I think this number was the most anticipated number in the recent period. So the 4.5% reading, as you rightly said, it's not a surprise. In fact, many analysts have expected it should be less than 4.5%. And as other analysts pointed out, I think the slowdown seems to be across the board, whether it is trade side or it is on the if you look at manufacturing or any other, the number that have come today on the core sector, and I think there is a overall slowdown and across the board. I think that seems to be more worrisome for us. And as Mr. Gopalan pointed out, even this 4.5% number seems to be coming largely from the government consumption as well as the private consumption. So I think right now it seems to be that the economy is in a very extremely dire state. And as the other question that you asked is whether has it bottomed out. So I think this relates to your previous question, whether the policy measure that the government has taken, will it have any lagged impact? I do believe, I think the measure that have been taken by the finance ministry should have some positive impact on the overall economic activity in the third quarter right now, although the October number seems to be showing a very sharp negative growth in the core sector. But I think when it comes to the consumption numbers, we should be looking at slightly better numbers when it comes in the third quarter.
Right.
I think one point which Mr. Gopalan very rightly raised is about the rising private final consumption expenditure in this quarter. Although the leading indicators seems to show that it cannot be corroborating those numbers, but I want to say that it is not the private final consumption expenditure not entirely depends on the central government expenditure alone. I think that a lot of states are also involved. In fact, there is also seems to be some kind of it seems to be reflecting on the declining savings as well. So maybe there are a lot of things happening, like there is a dwindling of savings, there is an increase in the state government expenditure. In fact, as you said, the fiscal deficit also increasing more than 100% right now. Even all these things seems to have some impact on the private final consumption expenditure. So overall, to me, I think the Indian economy seems to have bottomed out in the second quarter. Now the measures, as you know very well, there are a lot of measures the government has taken in the recent period. I think they should start really showing up on the overall economic activity from the third quarter onwards.
Okay, Pooja, I'm going to ask you the toughest question of all. What are the silver linings you see? Let's try and look at this glass half full. Do you see some sort of silver lining in the fact at least the private consumption numbers look better?
The silver lining I see, Tamanna, actually is on the financial sector. It has kind of held up, given all the bad news we've been seeing on the NBFC side, on savings rate across the economy, and yet the financial sector has held up. It, along with the government expenditure, is what is actually giving this number of 4.5% GDP growth in the second quarter. Had it not been for the financial services sector as well as the government expenditure push, I think the number would have been a lot worse than what we are seeing right now. At the same time, overall, I'm afraid I don't share the optimism of the chief economic advisor. I am a little worried about the next quarter, and I'll tell you what, I think whether or not this is going to be the bottom of the growth decline slowdown will depend on how government expenditure holds up in, because this quarter Q2 government expenditures increase in nominal terms by almost 33%. If the government is in the face of slower revenue collection, especially in tax revenue collection, is able to hold up that kind of expenditure, then the third quarter may show either similar performance or slightly better growth.
Okay.
But if government expenditure cuts are pressed in because of the fiscal deficit constraints, then I'm not sure whether we'll continue to see we'll see any upturn or not. So it's really in the hands of the government.
Well, now let's look at what the government has been doing and where they're going to get some money from. And I'm opening up this debate. If someone has a point to come in, please indicate and I will come to you. Divestment. Divestment is the big push. In fact, the DEA secretary also saying that,
I have a point.
It's a huge move that we are bringing, willing to bring government stake in public sector enterprises below 51%. There is some clarity on some companies, SCI, Concor, etc. Do you think that that process, if sped up in such booming markets, will help? Mr. R. Gopalan, yes?
I wanted to, when Dr. Bhanumurthy was pointing out one issue about state government expenses increasing and savings rate coming down, as a result of which the final consumption expenditure would go up. But the numbers on GST collection, I don't know how they support this argument. Anyway, that's a point which we can discuss later. As far as divestment is concerned, government has a huge task ahead. They look at BPCL as one of the saviors, but there are others which have been lined up. My only worry is that if you do a divestment of the type BPCL has been done, the bureaucrats will certainly look at what happened when they did in 2001 and 2002 and what kind of problems they face later. This is certainly weighing in the minds of the bureaucrats at this point in time. But if with the government giving active encouragement to take a reasonably good decision by the bureaucrats when they push it across, I have a feeling that BPCL is something which is doable. But I am not very sure whether you will be in a position to achieve BPCL sale by end of March. It might slip into April because of the various processes that are supposed to be followed.
Right.
Today's, as on date, the collection is about 20,000 crores as a disinvestment against a target of 1.05 lakh crores. So the huge gap which requires to be, bridged. The stock markets are holding up, which is good for the government in its disinvestment program. They are looking at ETFs as instruments for sale so that there are no difficulties as far as determining the prices are concerned, and I have a feeling that that's a good one to go forward, but everything depends on BPCL, how it pans out.
Well, is BPCL then the key ticket? Yes, Pooja, you want to come in?
Yeah, what I want to also say, Tamanna, taking forward what Mr. Gopalan was saying is that, I think the strategy of the government needs to change a little. You can disinvest in BPCL, but, that will take some time, then the money will come, then you will begin to spend it. So, you would have lost nearly 2 quarters by then. Whereas what is needed to be done is now, right now. So, I'm not sure long gestation infrastructure projects, construction projects, all those can happen, but what is required is something which will put money in the hands of people right now. So I think that strategy needs to sort of, change a little now, given the result that the GDP estimate that has come out today.
Okay, Anant, your point, and now, okay, let's start looking at solutions. We know that we're in a pretty bad shape. The government narrative is that fundamentals are strong. There is a huge amount of foreign fund inflows coming in. Equity markets are on a rise. Consumption on the face of it seems to have improved. So we are going to bottom out. The worst might be behind us soon. Q3 will be better. They're betting on divestment, but what else? Anand, I know you've always pushed for long-term reforms and hopefully they will come. But meanwhile, what else? Can we hope for more policy intervention from the Reserve Bank of India? Is that the way to go? What do you think are the next steps that the government can take?
So, Tamanna, look, a few quick points.
Yeah.
What can we do at this point in time to try and spur consumption, right? So the first, usual suspect is fiscal levers or monetary levers. The problem that I see really is that the true fiscal deficit of this government is much worse and much larger than is actually acknowledged. So between center, state and public sector enterprises, I'm already seeing a net borrowing of 9.7% of GDP, which is the highest of this particular decade. And that tells you what the size of the problem is. Now, the other problem is much of this borrowing is actually happening for just funding revenue expenditure and not really going towards capital expenditure. We are borrowing from our children's future to pay our current bills. It's not a healthy situation at all. So going forward, if we have to continue with this fiscal pump priming, we are actually going to test our vulnerability on financial stability. What's the other way we can do? You talked about monetary policy. I'm sure Governor Shaktikanta Das will probably push for a rate cut on December 5th. But here is the problem. If you're trying to push down rates, and by the way, transmission is not happening as it should, you're hoping that people will borrow money and therefore consume and then push up consumption. This is at a time when net household savings at below 7% is well below the actual borrowing being done by the government. You're actually asking savings to come down even further to push up consumption. I'm really not sure if this entire mix of using monetary and fiscal levers as the easy way out is going to get us into nirvana, or is it actually going to push us into a situation where we become even more vulnerable going forward? Which is why I think we have no choice but to actually push on the longer term issues. The issues are staring us in the face. We can see the issues in the financial services ecosystem across banks and NBFCs. We can see the issues in power sector, real estate, construction, airline and shipping, PSUs, you name it. Now, quick point on disinvestment. Yes, selling BPCL, etc. will help reduce the fiscal deficit. But remember, we are actually selling family silver to pay our current bills. Again, not a healthy situation. If it was going towards investments into productive assets, that's a totally different issue. So anyway, coming back, I stick to my old stuck record, which is that eventually we have no choice but to take these hard reforms head on. The good news, Tamanna, the silver lining from my perspective, is that is starting to happen. Now, some of these are controversial steps, but trying to change the labor code, trying to include NBFCs in this entire IBC process, trying to make sure that we actually pitch to some of these 300 plus names who can set up a shop in India. I think foreign direct investment and supply chains moving out of China, attracting them to India can be a huge way of pushing up investment at a time when domestic capacity utilization is low. It's not an easy road, Tamanna. We're all looking for quick fixes. We're all looking for what is a snap solution. Yeah. I don't think we have any of those. We probably have to go for long-term reforms.
What you said just struck me, Anant, on disinvestment. It's anyone in government is really stuck between a rock and a hard place. We keep clamoring for disinvestment, and then when they're moving towards it, then the question is that you're selling the family silver. Similarly, on between expenditure and fiscal deficit, you really can not do anything right, which is why let me pivot this, and I'm going to start this with Professor Bhanumurthy. I'm going to put it to you like this. If you were the finance minister right now, in the current situation we are in, because you know we all give a lot of advice, but you're the finance minister right now with all the political, economical, compulsions that you face, what really would you do? What is your three-step program?
If I think that's a very difficult question to answer.
It's a fair one.
It's
not to put anyone on the spot, but it's a fair one because you know we keep talking about what the government should do. There are really no easy answers. Sorry for the interruption. Please continue, yes. Professor Bhanumurthy.
Yeah. So I think what is needed right now is that you need to go for fiscal stimulus. I think that's the only way that is right now available. I'm glad Anant said that monetary stimulus don't work. I'm sure he remembers that I've been arguing that monetary stimulus is not the way to go at this stage, especially when there are slowdown both on the structural as well as cyclical components. So I think you need to have two sets of measures. One addresses the short-term issues where there is we don't allow the economy to slip further. And in the long-term measures, I think as Anant and others have pointed out, we need to go for some kind of structural reforms. As I said, structural reforms are always continuous, and the government has actually done it. To be fair to them, there are many measures that have been taken in the recent period since the last budget. So I think all those things should have positive impact on the medium to long term. But I think what is more important right now in the short term is I don't think any other option other than going for fiscal stimulus, even if at the cost of exceeding some kind of limits that we have. But at the same time, one needs to be a little more cautious whether whatever the 4% fiscal deficit that we are going to end up, what is the kind of quality of expenditure that government is spending, whether it is still simply going for consumption or it is going for some kind of investment activity. I think that distinction needs to be made. So for me, if the expenditure goes for investment purposes, especially the lot of pending projects are there, I think they are looking forward for funds. I think we have to identify some of the big projects that are stuck for the want of resources. I think that needs to be front loaded. I think that is the way one should go at the moment, even at the cost of fiscal stimulus. But on the monetary, I don't think right now, in fact, for the past 1 year, I've been arguing that we are continuously losing the space on the monetary side. And we have seen after even 135 basis points, now what we have is absolute decline in the GFCF in the second quarter. There is a negative growth. I think that needs to be understood before we suggest the monetary stimulus.
That's a very important point. There are problems with pass-through, etc. R. Gopalan, I'm coming to you with the same question. What would you do as of today? Where would you prioritize and focus if you were finance minister?
First of all, let me say that we need to look at how we, create the confidence of the public to spend. Yeah. Now, even if we give money to rural areas when they don't have looking at incomes increase happening, they are going to hoard it. They are not going to spend it. Probably they are spending more on education, on health, on personal care and other issues they are spending where the inflation is showing up in the CPI. Maybe they are looking at those kind of things, but that is probably a need for them on a day-to-day life. But I would say that the important thing to be done, as Professor Bhanumurthy suggested, that we should go in for irrigation programs. They are almost waiting for funds to be released, rural roads, rural housing, and roads building. Those are the items which can really kickstart the kind of confidence and then increase the economy, the output of the economy. And kindly please look at the fiscal multipliers which occur for infrastructure sectors as compared to any other revenue expenditure which is there. And according to under Indian conditions, fiscal multipliers are far better under infrastructure than in other areas. Professor Bhanumurthy himself has authored a paper which is available in the public domain. So I think I go along with Dr. Bhanumurthy at this point in time, and then that's the best way to go forward.
Okay, Anand, let me come to you on that key question, and also with the fact that the finance ministry's approach so far has been pretty sector specific. So they're looking at what's happening in NBFCs, and then there's a slew of steps, then they review it. Same with real estate and other sectors. Do you think that there are more announcements that are needed, because they're definitely doing all the talking up that they can do?
First off, Tamanna, I'm glad I'm not finance minister. Nobody wants to be in her shoes right now. But here is what I would suggest, right? First, I agree with Professor Bhanumurthy. If the money was going into infrastructure, even fiscal hawks like myself would have no problem. As long as we are borrowing at 6.5%, investing into productive assets which are going to generate us a nominal GDP growth of 10% and above, there can be no problem with that. The problem I have with the current fiscal balance is a lot of it is going into revenue expenditure, not enough is going into capital expenditure. So I completely agree with Professor Bhanumurthy on that part. Second part, look, I think one way of stoking good investment in this country has to be FDI. There was this report done by Nomura which said that of all the people moving out of China, the supply chains, lots of companies are going to Vietnam, to Malaysia, to Thailand, even Brazil. Only 2 or 3 are coming to India so far. Now, here is where we can step in, right? If we invest that infrastructure in ensuring that the connectivity between port and hinterland is available, there is ease of doing business on the ground, land, labor laws, get that FDI, that can really stoke a lot of investments going forward. Yes, it will take time, but it will be the right way forward. Third, I agree with the government sectoral approach. Take the financial sector, for instance. Banks and NBFCs are in trouble. They need to be sorted out. They're in no shape right now to either fund consumption or investments. Likewise, take power sector. We're kicking that can down the road. We know it's a losing business and adding to the exchequer's burden on an ongoing basis. Likewise with airlines and shipping, likewise with telecom, likewise with agriculture, you name it. Unfortunately, these issues have to be sorted. There is no magic wand.
Absolutely.
The good news, all of them have solutions. There are good committees which have made recommendations on all these sectors. And the good news also is the government is starting to take those steps. So I'm reasonably hopeful on that front.
Okay, that's good. It's good that there's some optimism there, but your point well taken and an important one. Pooja, I'm coming to you with it, and I think it's an important perspective, because we spend a lot of time analyzing what the person with the top job, in this case the finance minister, is doing, and there are really no easy answers. I mean, how much can the government even do beyond a point if private industry does not want to go out and spend and invest?
I'm afraid, Tamanna, that's not right. I think the finance minister, there are many things the finance ministry can do in-house. For instance, they can push a complete reform of the GST system, the collection system, for instance. That is a major reason for that minus 1% growth you're seeing in the manufacturing sector. There is a lot that has been said and written about how GST is leading to liquidity issues for small-scale industry, and that is also resulting in problems on the exports side. It's making Indian exports less competitive, and we are losing out to countries such as Bangladesh and textiles. So, this is completely in the hands of the finance minister, and she can really go call a meeting tomorrow of the GST Council and say, these are the 5 things we need to do to fix the GST. The second thing she can do is she can push out the money from her side to all the ministries or government departments that owe money to private sector companies for various kinds of procurement that have been done over the years. Only today, this morning, I heard a former chief economic advisor, Dr. Arvind Virmani, say that he has information and data on record for, in many cases, payments pending for decades. So I think, the sooner government pushes out its dues to other companies in the private sector, the better it becomes, the easier it becomes for them to deal with the demand slowdown. There are so many other things that have been documented, again and again. There is labor reform, there's land reform. All of those things need to be done. And I agree with everybody else on the panel as far as monetary policy is concerned. You see, if I'm somebody with investable funds or looking at borrowing to invest funds right now and listening to this debate, where people are, we are not able to reach a consensus on whether the next quarter is going to be better than what this quarter is or not, who's going to invest in this sort of a economic scenario? It affects business sentiment. People are going to invest for returns, and if there's no clarity on 2 years down the line what the growth rate is going to be, then people are not going to take that risk. It will make people risk averse no matter what the lending rate is. So I think monetary policy, the focus has been a lot in the finance ministry on getting the RBI to reduce rates. That transmission has not happened. And the other thing, also is that when we look at inflation data,
Right.
there is a kind of, the manufacturing part of inflation in manufacturing items is almost in negative zone right now. And if the number is at 4%, it is because food inflation is almost in double digits and it's been rising.
Yeah.
And we know that food inflation is, immune to monetary policy. So I'm not sure, like everybody else says, monetary policy is not probably the thing that's going to help in this situation.
Tamanna.
If you're able to hold on to your growth rate, for 1 or 2 quarters, you have a better chance of collecting more tax revenue next year. But
Okay.
if you're not able to, hold on to your GDP rate, it slows down even further. Can you imagine what will happen to your tax revenues then?
Absolutely. We're already seeing the slump there. Yes, Professor Gopalan, I saw you put your hand up. You want to come in?
Yeah. I wanted to mention to you that apart from what Pooja just mentioned, I also wanted to look at the tax people handling the industry, giving the kind of confidence, and tax terrorism just being removed. That is one area which finance minister can actively work upon.
Okay. Another point also that you were talking about, Pooja, was about confidence of investment. And I just wanted to point out, look at what's happening in Amravati, for example. Government changes and people's investments get stuck. We've had an announcement today in Mumbai that the entire RA metro shed will be stopped and reviewed. I'm not going into the right and wrong of it, but from a business perspective, and of course the metro project is a different one, ring-fenced. From a business perspective, these uncertainties add to the whole mix when you're expecting people to invest in more money, and especially global investors to come in. But we hope that things get better. I want to thank all of you for joining us on this discussion this evening on a day when we're talking about a very important statistic that we all need to watch out for, GDP growth in Q2 at 4.5%. But even as we talk about the GDP, there is another index that I want to draw your attention to. Now, according to the World Happiness Report 2019, there's been a big drop in happiness in India in the last decade, which is over half as big a drop as in war-torn Syria. India figured, in fact, in the bottom 5, along with Yemen, Botswana, Syria and Venezuela, according to this report. I think that's another index which is equally important and needs a lot of attention on. I'm taking a very short break, but coming up, we're talking about onion prices. What's going on with onion prices? Retailing at 130 rupees, 140 rupees in the city of Mumbai. My question is, are farmers getting that benefit as well? Well, apparently not. I'm going to talk about that after this very short break. A lot more coming up also on the India Development Debate. Don't go away.